Hello everyone, this is Paris. Welcome to BudgetHolics. Last week was a nightmare for crypto investors. On Wednesday, about $1 trillion worth of crypto investments were wiped out. But today, everything's been green. So is crypto finally recovering? That's what we'll explore in this video. If you're interested in personal finance, investing, and wealth building, please hit the like and subscribe button as this helps me immensely with the YouTube algorithm. Without further ado, let's jump into it. Some analysts are calling last Wednesday as the Black Wednesday of crypto. Bitcoin nosedived to $30,000, wiping 6 months worth of gains in just a couple of weeks. Unfortunately, most of us could not buy the dip, as most crypto exchanges also crashed on Wednesday. But what caused this news? On May 12th, we had the Elon Musk saga, and it's amazing how a single tweet caused all this commotion. Last Wednesday, Chinese regulators reiterated their ban of crypto for financial institutions. This is not the first time China is banning crypto for the financial system. This first happened in 2013, and again it happened in 2017. But as the market was recovering on Friday, a new announcement came out. According to Chinese government officials, the government will crack down on Bitcoin mining and trading behavior and resolutely prevent the transfer of individual risks to society. According to the South China Morning Post, the crackdown has two objectives. Firstly, to protect the country's financial system, as for some reason they view Bitcoin as a threat to this financial system, as a threat to their central bank digital currency, and secondly, because they're aiming to meet their energy emission and carbon emission goals. Bitcoin is viewed more as a store of value than an actual currency. So the argument that it somehow competes with China's CBDC does not make any sense. What would make more sense is that China is trying to censor a currency that is more decentralized and allows people a wider degree of freedom than their own CBDC. China currently controls around 65% of the global Bitcoin hash rate. This means that one of the reasons institutional investors were worried about Bitcoin is because of the energy argument. This is what Elon referenced in his tweet. And whether he indeed worries about the energy argument or whether he's worried about getting access to a credit line that must be approved by the EPA, the end result remains the same. Having China crack down on miners using coal power plants will undoubtedly reduce the carbon footprint of Bitcoin. And this will allow institutional investors to more comfortably and openly invest in Bitcoin. After the decline during the weekend, today cryptocurrencies seem to have recovered. Bitcoin is at plus 15.67%, Ethereum is at plus 36%, and Cardano at plus 37%. A general rule of thumb you should keep in mind when investing in cryptocurrencies is that within that space, Bitcoin is viewed as the safer asset. If Bitcoin is crashing, altcoins will crash more. And if Bitcoin is recovering, altcoins will recover much more aggressively. This weekend was yet another great opportunity to buy the dip. At this point, I should make a small disclaimer. This channel is for information purposes only, as I'm not a financial advisor. When it comes to investing, keep in mind that your capital is always at risk and always do your own research. If you need further help, seek the advice of a certified financial professional. If you're looking to get into Bitcoin, you can sign up to Coinbase and get $10 worth of Bitcoin with your first deposit and purchase of crypto worth $100 or more. And if you want to earn interest on your deposits, check out BlockFi using the link down in the description. With BlockFi, you can earn up to 8.6% interest on your crypto deposits, as well as up to $250 with your first deposit. China cracking down on non-renewable mining facilities will have two effects. Firstly, it will allow miners in Europe and the United States to compete more fairly. In the West, it's cheaper to consume energy from renewables than energy from fossil fuels. This is due to the rising CO2 prices. However, given China's traditional lack of transparency, miners in Europe and the United States could not compete with lower prices. If the playing field is now leveled and everyone can compete using the same standards, more mining operations in the West are going to have both an incentive and a way to compete. Secondly, if the overall carbon footprint of Bitcoin is decreasing, investors such as Elon Musk could have a footing to change their mind. Even for corporate wallets, climate change is starting to be a real threat. Most major corporations are setting ESG goals, and now Bitcoin could align with their ESG strategy. This time around, everyone thought that with institutional investors entering the crypto markets, Bitcoin could never drop by 50%. But this changed. And this should be an indicator that we're still not on the clear. Tomorrow, cryptocurrencies could drop again, or the crypto market could continue to recover. There's no way of telling what's going to happen, so nobody can tell you we're in the clear. A 20% recovery is surely significant, but we could see further sell-offs during the week. In terms of strategy, I always keep dollar cost averaging. The recent drop from 60,000 to 30,000 should be an indicator that sometimes, if your current position is 2x, 5x, or 10x your initial investment, it's a good time to take some money out, maybe your initial principal at least, and then dollar cost average this amount into the dip whenever that comes. Such crashes, if you're a crypto bear, or corrections, if you're a crypto bull, are always healthy for the crypto market. It shakes off people with short-term speculative perspectives and leaves room for existing diamond handlers to buy the dip and the opportunity for new investors to enter the crypto market at a discount. I'd love to hear your thoughts down in the comments to let me know whether you think this is a recovery or whether Bitcoin will continue to fall even below the 30,000 mark. If you enjoyed this video, please hit the like and subscribe button and share it with anyone you think might find it useful. Until we meet again, don't stop investing. Cheers.